Have you ever wondered how Analog Devices and Texas Instruments compare in terms of their financial performance? These two American semiconductor corporations, Analog Devices and Texas Instruments, have been leading industry players for decades, shaping the digital age with their innovative technologies. In this analysis, we'll be diving deep into their financials, comparing and contrasting key metrics from their total revenues to profit margins, and even their investment returns. We'll look at their performance over a 5-year period starting from 2018 to 2023. We'll break down their revenues by sector and geography, scrutinize their profit margins, and examine their net profits. We'll also weigh up the returns from investing $1,000 in each company back in 2018. And if that isn't enough, we'll delve into their asset situations, operational efficiency, and return on equity. So buckle up, it's going to be an informative ride. Stay tuned as we delve into the financials of both these industry giants. First, let's look at the total revenues generated by both companies. In 2023, Analog Devices, or ADI, reported a total revenue of $12.3 billion. Meanwhile, Texas Instruments, or TI, reported a total revenue of $17.5 billion. Now, if we take a step back and look at the bigger picture, we see an interesting growth pattern. Over the last 5 years, ADI's revenue has seen a compound annual growth rate, or KGR, of 15%. On the other hand, TI's revenue has grown at a KGR of just 3%. Now, let's break down these revenues a bit further. ADI's revenue structure is quite diversified. 53% of its revenue comes from the industrial sector, 24% from automotive, 13% from communications, and the remaining 10% from consumer products. TI, on the other hand, relies heavily on its analog business, which contributes to 75% of its total revenue. The rest is split between embedded processing at 19% and other sources at 6%. When we look at the geographical distribution of revenues, we see that both companies have a significant presence in the United States, with ADI generating 34% of its revenue there and TI generating 33%. However, they also have a substantial presence in other regions. For ADI, 24% of its revenue comes from Europe, 11% from Japan, 18% from China, and 12% from the rest of the world. For TI, 19% of its revenue comes from China, 26% from Europe, the Middle East and Africa, 10% from Japan, and 11% from the rest of the world. This gives us a clear picture of how both companies have grown over the years. It's not just about the total revenue, but also about where that revenue comes from and how it's been growing. So, as we move forward, it's important to keep an eye on these trends and how they evolve. Moving on, let's discuss the profit margins and net profits of both companies. To begin, let's look at the gross profit margin. In 2023, Analog Devices posted a gross profit margin of 64%, while Texas Instruments reported a slightly lower figure at 63%. The gross profit margin is a key indicator of a company's manufacturing efficiency and production costs. In this case, both companies demonstrate strong profitability, with only a slight edge for Analog Devices. Next, let's examine the net profit margin. This figure tells us how much of a company's revenue translates into profit after all expenses are accounted for. In 2023, Analog Devices boasted a net profit margin of 27%, a notable increase from its 5-year average of 23%. On the other hand, Texas Instruments posted a net profit margin of 37%, almost in line with its 5-year average of 36%. This suggests that while both companies are profitable, Texas Instruments has been more effective at converting revenue into net income. Finally, let's turn our attention to net profit. This is the amount of earnings left after all expenses are subtracted from revenues. In 2023, Analog Devices' net profit was $3.3 billion, while Texas Instruments was $6.5 billion. When we look at the compound annual growth rate over the last 5 years, Analog Devices' net profit grew at 17%, and Texas Instruments at 12%. This implies that while Texas Instruments had a higher net profit in absolute terms, Analog Devices had a faster growth rate. These figures give us a better understanding of the profitability of both companies. In terms of efficiency, Texas Instruments appears to be slightly ahead, as evidenced by its higher net profit margin. However, when it comes to growth, Analog Devices has shown a stronger performance, with a higher compound annual growth rate in net profit. The analysis of profit margins and net profits provides valuable insight into the financial health and operational efficiency of both companies, helping to inform investment decisions. Scene script. Next, we will compare the investment returns if one had invested in both companies 5 years ago. Let's say you invested $1,000 in both Analog Devices and Texas Instruments back in 2018. Fast forward to February 2024, your investment in Analog Devices would now be worth $2,210. That's a 121% increase from the initial investment, averaging a 17% annual growth. Now, looking at Texas Instruments, your investment would now be worth $1,676. This reflects a 68% increase from your initial investment, averaging an 11% annual growth. Now let's shift our focus to the asset base of both companies. By the end of 2023, Analog Devices had total assets worth $49 billion, with net assets amounting to $36 billion. Texas Instruments, on the other hand, had total assets worth $32 billion and net assets of $17 billion. To provide a clearer picture, the equity to total assets ratio for Analog Devices stood at 73%, while Texas Instruments was 52%. Next, we take a look at the current ratio, which is a liquidity ratio that measures a company's ability to pay short-term obligations. Analog Devices had a current ratio of 1.37, and Texas Instruments had a current ratio of 4.55. Another important liquidity ratio is the quick ratio, which excludes inventory. Analog Devices had a quick ratio of 0.86, compared to Texas Instruments' 3.35. This helps us understand the return on investment and the asset base of both companies. It's important to note that a higher return on investment doesn't necessarily mean a better investment choice. One must also consider the company's asset base, liquidity ratios, and other financial indicators when making an investment decision. Finally, we will look at the operational efficiency, cash flow, and ROE of both companies. Analog Devices' inventory days stand at 125 days, while Texas Instruments is at 190 days. Similarly, accounts receivable days for Analog Devices are 48 days, with Texas Instruments at 38 days. Moving on to cash flow, Analog Devices' operating cash flow is $4.8 billion, and Texas Instruments is $6.4 billion. Analog Devices' free cash flow is $3.5 billion, while Texas Instruments is $1.4 billion. Analyzing return on equity, or ROE, we find Analog Devices at 9%, and Texas Instruments at 39%. The net profit margin for Analog Devices is 27%, and for Texas Instruments it's 37%. Their respective asset turnovers are 0.25 and 0.59. This gives us a comprehensive understanding of the financial performance of both companies. In conclusion, both Analog Devices and Texas Instruments have shown strong financial performance over the years. Analog Devices has demonstrated a higher growth rate in terms of revenue and net profit, with a compound annual growth rate of 15% and 17% respectively over the past 5 years. Texas Instruments, while growing at a slower pace, has maintained consistent profit margins and boasts a higher return on equity. The sector and geographic breakdown of revenues for both companies highlight their diverse income streams. Their current and quick ratios indicate a solid liquidity position, while operational efficiency metrics shed light on their business operations. The investment comparison reveals that an investment in Analog Devices would have yielded a higher return over the past 6 years. Keep in mind, however, that past performance is not a guarantee of future results. Don't forget to subscribe to our channel for more such financial analyses. Feel free to suggest which companies you would like us to analyze next.